Good morning, Wall Street. In this video, we're going to follow up on our discussion in the last video that had to do with looking at seasonality data and screening to focus in on good ideas for stocks that are attractive and those stocks that are unattractive. In the last video, we looked at stocks that we focused in on as being attractive. This was one of them, coherent. You can see that the strong seasonal heat that we saw is a positive from a seasonal standpoint. Now, the market has been fairly weak lately. That is in line with January seasonality that we discussed a few videos ago. We see that the stock is trying to hold its DMA channel on a daily basis here. Now, the other stock that we looked at last time was Becton Dickinson, and that clearly has strong seasonal heat heading into late January. And as we noted last time, it had broken out very nicely, and it's held that relative strength and moved a bit higher, even during this weak market and the weak seasonal period for January. So the seasonal impact here on the stocks that we looked at seems to have been a help. Now, in the library section here, we have our screens, and the screen we want to focus on in this video is the high cycle R top 20 week seasonal zone issues. And we're just going to take a look at that. And there are a number of things we can be sorting on. We have currently sorted on the seasonal juice 20-day look ahead, which is how much is the seasonal cycle going to move over the next 20 days. And obviously in these issues, the seasonal pattern is going to drop fairly significantly. We're also concerned with seasonal cycle R. We could sort on that and get issues that have very valid seasonal patterns. We can sort on those issues that have a consistently weak pattern during the current weak seasonal zone. That's the seasonal short zone average net heat. But the thing that I think is most valuable to do is to let the trends and the market work with you when you're looking for strength or when you're looking for weakness. So we're going to go to our Erlanger trend direction indicators here and look for stocks that are currently weak, either in a downtrend or in a pullback. And then go and look for those that have high seasonal juice. Perhaps the seasonal heat is very negative. So let's take a look at Tenet. And you can see the chart here clearly is in a downtrend from a seasonal standpoint. And interestingly, going back into last year, its peak was right here. Let's just put the crosshairs here, add some data. So the peak was right there on the 17th of December. And right at the peak of seasonality, the stock gapped down. And relative to the market, even during this period when the market had its mild rally, the stock has been weak and still moving lower. Let's look at another one here, Omnicell. Omnicell, weak from the beginning of January, and that's pretty much when it peaked and starting to drop. Had a good day yesterday, and in fact the seasonal cycle is moving up here just a little bit, but peaks out again around here. So you could see it trying to fill this gap, test the DMA channel as resistance, and further weakness going on into February. The point I want to make is that these stocks are already in downtrends, established downtrends or pullback phases. Looking at Unilever here, from a seasonal high here at the end of the year, last year, falling away, and in the last couple of days it's gapped down, so it's having some issues too during a seasonally weak period. So the idea is to go with the trend. Don't try to fight the market and maybe try to call tops in stocks that are in uptrends at the moment, even if they are in a screen like this. The low-hanging fruit lies in stocks that are seasonally weak, that have negative numbers, and that are in established or developing declines. that's the strategy that we favor, and we hope that helps, and see you next time.